Welcome to another episode of Real Estate Investing Explained. Here's today's question. So you also mentioned that you're selling some properties for as low as $18,000, $20,000. How do you buy properties below that price, renovate them, fix them up, and then sell them for those dollar amounts and still make money?
Well, you bring up the question, if you can't do that, do you just not do the deal? I mean, if we have to buy it for, let's say we're talking about one of those more higher end parks where it does command a higher priced home, people with money, people that have cash, people that you can sell it for a much higher down payment. You can sell it for 10 years or more. So you can certainly get into those other priced homes. I mean, definitely don't want to, and that's something you should do. I mean, if the numbers make sense, you might not be making your money back in a year. It might take 2 years to get your money back. But do you have another 8 years of cash flow after that? Those still make sense. And going back to your question about the minimum deal we do being 5 years, that's not exactly correct, because you have some buyers that say, listen, I don't want to pay you for the next 5 years. I'll give you $600 a month and let's just get this let's get this done a lot sooner. Or I'll give you $1,000 a month and let's get this done real soon. So you have some people that don't want to do that. Or if we're selling like an old 1970 something, which is okay, but we're selling it as a handyman special, we know we're not going to get 5 years of payments probably. So I don't want to say you have to sell it for this long. We just have to be realistic on what we can sell it for. So I just wanted to bring that up first. But to make the numbers work, you have to know what you can sell it for first. So you have to know what buyers are paying for cash, what they have paid, what they're willing to pay. And then you can sort of work backwards to say, well, okay, this is how much buyers are paying. These are how much repairs the home needs. This is all the other numbers that may go into the deal. What can I buy it at? What's my maximum dollar amount where I can get my money back in a year? And then, okay, well, the seller isn't anywhere close to that price. Do I just walk away? Do I stand firm? Do I negotiate and become emotional and keep working my way up? And then I lose profit, my margins go down. Or do I go to the next park? You have easily over 100 parks. I want to say over like 250 parks within a 50-mile radius of it. So nobody listening to this podcast should go out to their first or second or fifth or 10th park and buy their first home. You should have a lot more clarity. We need to really understand who's out there, what are they selling, why are they selling. Let's make offers to most of those people and move forward with the path of least resistance. How am I going to make my money back quicker? What repairs are going into these homes? Yes, this guy over here is fairly motivated, but these two people over here, it's a way better, quicker deal.
That's all for this episode of Real Estate Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.